All right, here we go. All right, friends, how you doing? Ernie here, and this is the final hour to expiration, or 0 days to expiration, and the final hour show. And today, as the title says, we're not really going to see how to trade in the spirit of a Hail Mary pass like in football. That's not what we're doing, but it is to talk about the efficacy of putting on long shot trades. And when I was an institutional trader, we used to have this idea that every day we would, or at the end of each day, we would put on this long shot trade or hang an order someplace that would be outrageous to think that it would hit. And if it did, it made a lot of money. It was very little risk, threw it way out there, way out of the money. And if it came through, man, some of the biggest trades I've ever made were on long shot trades like that. Or a Hail Mary is another way to put it. And that had a lot to do with me actually creating this service. Now, I wasn't into just, guessing that we were going to hit one of these trades. But besides the fact that they have such little risk associated with this type of trade, and the return is so big, you don't have to hit very many of them for them to make up for all of the risk that you take, even if you take these every day. If you only hit, say, 1 in 20, you're way ahead of the game. And that would happen quite often. And some of them you could say would be 1 out of 50, and you'd still make money. So I wanted to know, well, to what extent could you put on a low risk, high reward trade where you could do it consistently on a day-to-day basis, and you could actually turn it into a strategy. And that's really what this service is all about, or this particular strategy or methodology that we use, the asymmetry of risk to reward. However, I wanted to bring it down to a point where it was, pretty practical, where maybe you had a reasonable win rate, and you could see doing this on a regular basis. And so really that is exactly what we do. And every once in a while there are opportunities to put on a trade like that that even go beyond what we consider our normal classic trade that we take from day to day. Like yesterday, for instance, I put on a trade trying to pin the ending of the day. And I was, fair amount of points away from there, but I was able to put on a trade that cost minimal. It was a butterfly, cost me 55 cents. It was about a 1 to 10 risk to reward, and it hit. Not only did it hit, but it nearly pinned. And so on a trade like that, man, if you could do that just, once out of every 20 times, it would more than pay for itself. So anyways, that's what this is about, and what are the ways that you could enhance your chances of actually achieving one of these long shot trades. Now, there are a couple of ways. One is that we use as our primary mechanism for analysis volume profile. And with volume profile, that will often give us where the what the market perceives as value and not value. And the demarcation, or the areas between those two places, value and not value, represent a kind of an inflection point. Now, someone brought up to me earlier today, they showed me this tweet that was out there from a, let's see, let me see if I can get the name of the Twitter handle here. Let's see. Hold on, I'm getting there. So it's called, oh, here it is. No, that's not it. Hold on. Ah, here we go. It's called All Gamma All Day. Now, it's interesting. I started looking at All Gamma All Day, and where they're showing. Now, if you don't know what gamma is the sensitivity of price to, or the sensitivity of your option value to price. And as the day wears on for us as options traders, we trade option collection devices, particularly a butterfly. It creates a profit curve that looks like a bell curve. It grows and grows and grows, and it gets very peaky. And then if you're right in the center of that curve, that's a great thing because you're likely going to achieve what we would call a pin trade or a maximum profit trade. If price starts moving to the left or to the right, it starts falling off the edge of that profit curve. And that's essentially what gamma risk is about. The slope of that profit curve is in effect the gamma risk. That is, your sensitivity to the value of your option varies dramatically as you go to the edge of that curve, and then it can fall off. You can go from making thousands of dollars to making nothing with just a very small movement. And so with that, you might want to know then, what will put me into a position that would give me a higher probability of achieving one of these gamma risk trades or high gamma risk. How do I put that into my favor? And I think that's what one of my members, the members of my service, was asking. And how can we also use volume profile? Now, one way is that you could certainly subscribe to this, what is it called again? All Gamma All Day. Subscribe to their channel, and All Gamma All Day. Subscribe to their channel and just watch their gamma report that they come out with on the SPX every day, and you'll be able to see where that peaky part is, where there's zero gamma risk, and where the maximum risk is. Now, the idea is that if you get on that slippery slope, just like if you were evaluating the volume profile, which is the line of demarcation between value and not value, there's going to be like a switch flipped where you get over the horizon and then price wants to accelerate once it gets over that horizon. And so that's actually what I'm experiencing right now. Let's see if I can get this on screen here. All right. So what you're seeing here is the SPX. And what you're not seeing really is that I have a trade on, and let's see if I can get that up here. All right. So I have a trade on right here that is sitting at the edge of what All Gamma All Day would consider their positive gamma. Now, their positive gamma, their peak gamma is sitting at 3970, which would be right about here. All right. And I have a trade that is just above that. And so what I'm looking for is for price to get over that hump and then sort of slide down the gamma curve. And so that's what we're looking at right now. And so if you look at price and you look at it in relation to volume profile, at least on the session profile, this probably falls right in line with the All Gamma All Day numbers, where zero gamma risk would be at about, I'm going to say 39.57. And let's see, what do they say? Where is their zero gamma? Go away. I don't know who's calling me. Yeah, so they have it right at 39.57 as well. Okay. So I don't know that that's just a coincidence, but I see this volume profile node, the session node that's created here, and zero gamma, according to all gamma all day, would be right at the POC of the session node. All right, and so that would also imply that anything above this area here would be high gamma or high sensitivity to price change. And so my idea is that during those periods of high sensitivity, you either want to move price towards the zero gamma or completely away from it. Now, I guess one thing I could do is I could put on a premium collection tool right here at 39.57 if I could get a good price on it. But I have one further out here that is already placed with really good odds and very low cost. So I have about 80 cents invested, but the potential profit is about $900. So it's better than a 1 to 10 risk to reward. And I really don't have to go very high up on this profit curve to make money. As a matter of fact, I could be anywhere in this area and make money. Now I'm down a little bit, but the amount that I'm risking, $80, is nothing. If I can get anywhere close, to the peak of my profit curve here, and of course there's gamma risk associated even with my trade in of itself. So if I were to look at this from a gamma risk point of view, my zero gamma point is probably right at the peak of this curve, or right about here at about 39.86. But according to the report, the peak gamma at least peak positive gamma on the S&P is at 39.70. So what I want to see is whether or not when we get near that peak gamma, whether or not that's going to induce price to move quickly away from that. So it'll either move towards the zero gamma, which is sitting right here at 39.57, or it will move towards the other side of peak gamma, which should put me, interfering with my trade. And if it interferes with my trade, then I make lots of money. All right. So we have some members online right now. So that's the experiment that we're doing. This is the Hail Mary. And this is how we might put gamma risk, in our favor. And whether or not, and often this is the case when you're on this peak gamma situation, a lot of times you'll get price moving very, very quickly because price doesn't want to be there. It's unstable. So we'll see what happens. We will follow this right to the bitter end. Now, you can see right now, this strategy right now is only worth about 5 cents. But if I were to move it to here, right, then it's worth about $1.50. So you go from 5 cents to $1.50 with just a 10-point move. And then if we're a little later in the day, that same position here is probably going to be worth closer to $2 or $3. If I get into the center here, I could be worth as much as $8, $9. Right? So you can see how much it can explode just on, and how sensitive the price is according to, this scale here. And what we're looking at, I think, now from a volume profile point of view, this level right here has been a critical level for us all day at 39.64. That once we get over that level, there's a lot of frothiness up here. And then this level up here, 39.80, is a huge level on the SPX in the long-term charts. This line right here represents on the bottom, prices under that inside of a very large volume node. Prices above that is a vacuous area where there's very little volume. And so price tends to be attracted to that and challenges it. And so what I'm seeing here now is this confluence of things. We have our gamma risk, which is extremely high just underneath it. Then we have zero gamma right here at the POC of this volume node. I'm thinking that price is going to accelerate towards here to get out of that high gamma risk area and gravitate towards here. It's either going to gravitate here or towards the zero gamma area, and then that will allow me to profit. So there's our situation. We're right here. We just needed to go up a bit into this area for max profit. Well, we'll see what happens. We've got 28 minutes left in the market, 28 minutes to move up about 15 points and to go from a strategy that's worth 5 cents to potentially being worth $9. Now that's a Hail Mary, if I've ever seen one. All right, let's see here. Let's do a roll call and see who's on board. We have Iz. How you doing, Iz? Hello, hello. Is hello squared. And Brent is here. Will Do is here. How you doing, Will? And Tim Dodds. Jay Hen, nice to see you. Robro. The GEX bot. Is there such a thing as a GEX bot that you can put on your Discord server? I'm not sure. Eugene's here. How you doing? 123 Happy Street. And JMO James, nice to see you. All right, we're going the wrong direction. We got to go the other direction. We've got plenty of time, though. So earlier today, I had put this trade on, and it really looked to me, well, let me show you what was happening. So this morning we had what I would consider what I call a spike up, right? And that happened at the open. And typically on these types of trades, you spike up like that, you consolidate a little bit or grind, and then before continuing on, in this case, maybe continuing on to this monumental resistance area, you pull back, usually about 50% of that spike up, which is exactly what happened here, and then move back up. Now, that's one pattern where we'd come up and then sort of grind to right into the close. The other is if we can roll over. Those are the two instances that I usually see. And so I thought, okay, it's going to probably roll over. And so we didn't bother taking a trade. And then it reversed itself. It looked like it found the bottom here, the same pullback bottom it found here, and new life, and started to move back up to this area. And I thought, man, if it crosses this level here, that has been an important inflection area, there's a good chance that we're going to get up here. And so as it started to rise up here, I took this trade that I showed you earlier. And almost as soon as I put that trade on, everything reversed. I mean, it just went down, 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 almost to the lows of the day. And since then, it's been slowly grinding up again. Now, will it? It doesn't have very much time left, and we're running out of time. We only have 25 minutes. So the question is, will we turn it around, and will we be able to make it up in this area where we would have big profits? Should we end up anywhere in this area here and hit a new high? If we hit a new high, we have big profits. If we don't, if this whole idea of gamma sensitivity does not pan out, Right now, price is sitting right at what all gamma all day points as having zero gamma. I think that's at 39.57 or so, right here on this POC. And max gamma is actually at 39.70, which is up here. So the idea is if we can get to here, will that be enough to get over the hump to push us higher? Right now, it doesn't look that way. But I said that, I said that down here before it took off and then reversed on me. Yeah, this felt like an epic fail to me. And I never really put a lot of risk onto it. As a matter of fact, all of these types of trades we put on very, very low risk. So I only spent 55 cents on this trade. And then I added to it another 30 cents. So my average cost or risk on this per contract is about 40 cents for a 5 wide. So that would make it about max profit of about $460 per contract. And there are 2 contracts. So about $900 potential should we move up. So now we're in this precarious situation. It looked like it started to move up, and I thought there was going to be something to show everybody here on the final hour show. I mean, we've shown a lot of pin trades before, and this I thought maybe could have been one of them. But right now, it's not giving me that same kind of hope. It's sitting right here at the POC, and so if I were not looking at this in terms of the gamma sensitivity, I would say that this is, well, even in terms of the gamma sensitivity, I would say that this is probably where we're going to end up today. This is probably going to be the closing price at 39.57. Let's see, is that the actual price? Well, right now it would be about 39.62. So that's my best guess for today for the close. I don't know if anybody else has their ideas. What is your call for the day? So if you're out on the chat, let's hear what you have to say. Where do you think price is going to close? Are we going to close there, or are we going to slide down the gamma hill and into this Hail Mary strategy? Right. So is saying the bot says that SPX 39.75 5 wide. Oh, that's what he's putting on. Let's see if we get a squeeze. So if we get the squeeze, that'd be great. The gamma squeeze. If we get to peak gamma, but we have to get all the way up to here. Right? We were almost there. Look at that. Almost there and then got rejected. Now on the other side, there's the antithesis to 39.70, and that would be on the other side, and that is actually at about 39.50. So that's way down here on this yellow line. But it looks like it's in our favor right now. It looks like the gamma squeeze is in our favor. All right, 123 Happy Street says 39.60 as his close. So that comports to what I say. All right, let's go to a smaller time frame so we can get the full effect of the volume coming into the market. Now, for us, this is more of an end of day play. We've already laid our bets for what we think are our best chances, putting on a much wider fly. And right now, that would be the shaded areas that you see above and below. So we have a bearish fly and a bullish fly. And you can see that we're really just hanging out right in the middle. If we were trading these two, we would have been out long ago. So around 2 o'clock or so, we usually look at what our what our combined risk is, and we'll get out of that trade. So that's over now. And it, might have made a little bit of profit up here around 1 o'clock, 1:30, if you were in that trade. But right now we're looking at this Hail Mary, Gamma Mary, Hail Gamma trade. And who knows? We might turn around and start moving up sharply, but I don't know. I would say, based on my experience, this thing is likely to just hang out right here on this POC and die on the hill. That's what I'm saying. It's going to die on the hill. And maybe I can make a call and get things moving here. Hold on. Yeah. Yeah. 39.70. Yeah. Oh, where do I have it? Center strike at 39.85. All right. Thanks. Bye. All right. Got my order in. We need background music. That's right. We need Commissioner Gordon. Got to call. I called him on my bat phone. We are definitely running out of time. We have 18 minutes to go. And a long road to hoe. So it's looking more and more. I'm saying that we're going to end up right here at 0 gamma. Let's see. I'd have to look up. Let's see. Let's bring on the. All right. So as of 4 minutes ago, nothing's really changed. 0 gamma is still sitting at 39.75. And positive gamma at 39.70. So let me show you what I'm looking at. This is the all gamma all day feed. And this is the most recent report out. So 0 gamma is really situated almost right on the session POC for the day. I wonder if that is something that you'll see more often than not. I would assume so. All right. So now we're going in the opposite direction that we want to go in. Maybe, Robro. Maybe we'll rally to the close. I've seen bigger rallies, to tell you the truth. I've seen in the last 3 minutes price move 50 points. But I'm not going to get my hopes up. That's why we take small risks. And as I said, this is kind of a hallmark of this strategy where now we don't take all of our bets to this extreme. But typically we'll take a fly that's a 1 to 7 or 1 to 8 risk to reward. Now, reward is a difficult thing to defend. It's we use the wording only because that's the potential. We're not saying that that's what we're going after, that reward. But you have to measure it by something. So when you're looking at a butterfly, for instance, and you say 1 to 7 risk to reward, you're referring to the 1 represents the debit, and then the reward represents the max potential profit. So we use that ratio as our ballywick, as our guide to figure out what type of trades that we want to put on. So when we say reward, I don't want people to think, well, we're going for that pin trade every time. That would be, not realistic. In reality, we come within a few points of that pin trade about 10% of the time. If we're doing just one fly, about 5% of the time. And that's within a few points, not hitting it exactly. Hitting it exactly, that would be spectacular. But even coming within a point or two can result in huge profits. So when we say 1 to 7 risk to reward, we use that, like I said, as our guidepost. That is the type of trade that we want to put on where we expect a certain result over time. And the interesting thing about trading this way, this asymmetric way of trading, is that because you're trading with such small risk at hand, you don't have big drawdowns. That's a given. You have very little volatility in your equity curve, and you tend to have an equity curve that stair steps up. The other huge benefit of trading asymmetrically is that because you're, even if you have multiple losers in a row, it never really hurts you. You're never in a panic state. You can control the anxiety very easily. And that in of itself is an edge that we have. And it allows you to stay more level-headed, make clear-headed choices, logical, rational. And so that's another benefit of trading this asymmetric way. And this is in direct contrast. Look at it. It's going the other way. Maybe we'll get the gamma squeeze on the downside. So this is in direct contrast to the way most retail traders trade and the way most zero DTE services trade. Most of them are trading with high probability iron condors, where the risk to reward is the exact inverse of what we do, where they're taking huge risks to make very tiny rewards, usually 20 times the risk to the reward that they're going after. Can we do it? Can we do it? So maybe I should look up like this so I look like I'm looking at it. The other problem with trading these high probability trades, the zero DTE with iron condor and the inverse relationship of risk to reward, where the risk is very big, is that long term those trades really have a negative expectancy from a mathematical point of view. So trading asymmetry with small potential risk or small risk and large potential profit is more the way that more professional traders trade, or virtually anybody that is in any kind of professional situation, whether it's trading or sports or the arts or science or whatever. I mean, we would never get along and be able to survive if every single choice that we made involved huge risks to make small gains. But for some reason in trading, it would seem that most people that take it up feel that that's the way to go, when in fact it is the exact opposite of what you need to do. And I attribute that mostly to the idea that people enjoy that dopamine drip that they get with small, frequent winners. Even if the occasional loser can wipe out all those winners, they can handle that in terms of the compression of time, because it only that really short, sharp shock lasts only for a brief period of time. They can get back on that dopamine drip. And so I think that dopamine, if I were to quote one of my mentors, a good friend of mine, just the other day, he's saying dopamine is perhaps the number one cause of most people failing at trading. And in fact, the people who are successful at trading are those that can manage their fears the best. I've noticed that all of my, or most of my best trades have always come under, the feeling that I'm wondering if I'm going to make it. It just doesn't seem possible, or whatever. You're kind of a little bit on edge, and not because you think it's a super risky trade, but that's just the feeling that you get. I mean, if yeah, are we turning around in the last minute? Wouldn't that be cool? I don't know. I don't want to get my hopes up here. It really needs to get above this line here at 39.64 to have a chance. And I don't know if that's going to happen. We only have 7 minutes to go. That's a tall order. But those people that can, I said this earlier in the Discord. I said that those people that can handle their losses are generally going to be the people handle them the best. Are generally those people that are going to be most successful. I think that there's another trader out there that even wrote a book on this. His name is Tom Hogarth. And he said something to the effect of that the best loser wins. And that's so true. If you can handle the idea of losing on a frequent basis, if winning means something much more, then you're going to have a much greater chance of winning overall. So we're centering on that POC is really centering down on 39.57, exactly where all gamma all day had predicted. Their prediction is at 39.57.50. And if we were to look at this this bar, that is exactly where that bar is, 39.57.50. So we're right at 0 gamma. See, all I have to do is talk about it. Less than 4 minutes to go. It was 4 minutes ago, the last report that I saw. I'm speaking to Iz. He's asking how early. Yeah, let me put it up there. How early did all gamma all day predict that bar? Their first prediction was actually much earlier than that, but the most recent post said it. Let's get that gamma squeeze going. Once we get over the 3970 area, it should, but it's got a long ways to go. It's asking a lot with less than 4 minutes. Yeah, see, I'm way, way out. Should have put the trade on at 3970. So that concept of the best loser wins is so true. When you trade asymmetrically, in other words, when you trade low probability, high potential reward, you're going to have a fair number of losers. In our classic strategy, my win rate is around 53%, but the return is fantastic. It's between 5 and 7% per month. And your ability to be able to handle a lot of losers in a row but still have the fortitude and the discipline to stay with the trade, knowing what the long-term result is going to determine whether or not you're a winner or a loser. The idea that you get drawn into high probability trades where you're winning small a lot, and then there's no control over there. You're just in it because you've got that drip going and you feel good, and then you can skate over those huge losses, even if they're devastating. That's not a winning philosophy. That's not a winning strategy. So someone who is able to manage their emotions through those times of, relatively small losses, but they can add up, from a psychological point of view. But if you can handle them, knowing what the long-term gain is, you're going to be a winner. I think that's the problem with most people that are looking at trades like that. They don't see the long-term game in that. So that's one of the reasons why I have a 4-week trial, to give people enough time to get through the ups and downs of a strategy, and then to see the efficacy of the strategy itself, and the need for developing that longer outlook. I really like that. The best loser wins. So we have under a minute. It really needs to move now. I don't think it's going to happen. We're sitting at 39.65. No gamma squeeze today. It might happen after hours. We're looking at the E-mini futures, so you can see the volume coming in here. Look at that volume coming in. Wow. Big dump. All right. Well, overall, it was a successful day, so that's good. Did the little Hail Mary at the end to see if we could take advantage of this potential gamma squeeze. Didn't quite happen. It was an unusual day in that we spiked up, looked like we were going to continue up, but then just totally gave it up. And I expect that the market is going to be like that for the remainder of this week and the beginning of next week, until we get the Fed come out with on the 14th with their rate hike announcement. The bond market is predicting a 50 basis point hike. I don't know. Let's check that out. Let's see if that is still on. If we go to the Fed Watch tool, we can get an idea of what are the odds are for a rate hike next week. Yeah, so it's 80% for a 50 basis point hike, 20% for a 75 basis point hike. Last week, or earlier this week, there was a rumor going around, or a quote whistleblower, that said that what the Fed is saying in public isn't necessarily what's going on behind the scenes. Although they don't want that narrative to come out, that there may be higher or larger hikes in the forecast and lasting longer, according to their projections. Of course, it's hard to believe anything that the Fed says because they're so wrong so often. Not just so often, they're always wrong. Always wrong. However, we still put all our faith in them. We have no choice because they are really determining the future cost of money for us. So you can't really bet against them, even though they may be wrong all the time. I know it's an unusual situation. All right, so that's it. That's today. Our Hail Mary didn't work. We weren't Doug Flutie today. Maybe next time. So thank you very much. Peace to you all, and we'll see you tomorrow.